Okay, so this is the mortgage credit certificate, the MCC tax credit. So this, what the tax credit is, every year you pay your mortgage. This actually isn't a loan. It's an added benefit. It's a supplement you get from the IRS. Every year you pay your loan, you actually get a refund of 20% of the interest you pay every single year for the next 30 years. So, for example, if you pay, let's say, 5% interest on your mortgage, well, you're going to get 20% of that 5% you paid that year refunded back to you in the form of a check. So I'm going to go ahead and explain this program for you right now. All right, so this is the mortgage credit certificate. Awesome program. We offer this to every single first-time homebuyer that comes through our office, and most of the families that we can offer it to actually take up the offer and will get this tax credit. So what this is every single year you pay your mortgage, the government will send you a refund of 20% of the interest you paid that year, and you get it every single year for the next 30 years. So what's the catch? There's always a catch. There's no such thing as a free lunch, I like to say. So let's say you own your home and you have it for 9 years. Well, after 9 years, if you were to sell after 9 years, you wouldn't have to pay any of this interest that you got refunded back. If you sold your home within the 9 years, you would have to pay what you got from as a refund back to the IRS from the equity you have in your home. It's basically allowing you to defer your interest that you pay, or 20% of the interest you pay. It's allowing you to defer that, so that it helps you keep your mortgage more affordable. Now, the cool thing is if you have this over 9 years, then you don't actually have to pay this tax credit back. So you get it for every year you have the mortgage. Some borrowers are allowed to take this savings each month by increasing their IRS deduction. So what that basically means is, I get this question a lot. Pete, can I get this on a monthly basis? Because the tax credit, you get this each year. You get a payment from the IRS. You get an actual check when you do your taxes. Well, what happens if you want to use this every single month? Well, what you can do is you can change your IRS deductions if you're employed. You can increase your deductions to actually get more back and pay less each month to the IRS, knowing that you're going to get this refund. Also, the 20% can be used as income. So what this allows you to do is you can actually qualify for more of a house. So let's say you got approved for a certain amount and with a specific lender, and they told you, but you want to buy for more than what they had said you qualified for. Well, you can actually get this credit, and you can actually use it as income to help you qualify for more of a home. Also, when you get your tax refund, when you get the check in the mail, the 20%, you can use it for anything you like. I would actually recommend you take this tax credit and you apply it towards your principal, which then you would pay your home off a lot. It's actually, it comes out to be about one extra payment a year with this refund. And if you apply it towards your principal, you're just rapidly paying down your mortgage, and you would pay your home off 5 to 7 years faster. How you qualify? You have to be a first-time home buyer. You must meet the income requirements, which I put. The income requirements in Shasta County right now are about 80,000 for a family size of 1 to 4 for this program. You can use this tax credit with any of FHA, USDA, or VA loans, also conventional. And then you do have to have a minimum credit score of 580 to qualify. If you have any questions, you can send me a text at my cell phone here. You can give me a call. You can also shoot me an email here. Hope you guys are doing well. That's the MCC tax credit, mortgage credit certificate. Talk to you soon.